Well, interest rates keep going up. All four major banks have said that they are going to pass on the rate increase now. But one commentator says there could be a silver lining hidden in this latest rate hike. Chris Foster-Ramsey is the principal finance broker at Foster-Ramsey Finance and joins us on the line now. Chris, many would say that you're crazy.
They may. Good morning, Stephen. Look, I think there is a lining here, and it's got to do with the difference between a rate offered to a new customer and an existing customer.
Okay. Explain that to us.
Sure. So lenders will chase business for new customers, and they will heavily discount the rate to remain competitive and to attract new customers. And as these rates rise, what we're seeing is existing customers, the rates being the RBA rates and the increases being applied to existing customers. They're not the rate that customer ends up with if they're with their existing bank is not nearly as competitive as a new client to a refinance client to a different bank.
And you've made the point that lenders actually do have room to move on those rates because the retail rate and the cash rate that the RBA sets are obviously very, very different. So there's obviously quite a bit of wiggle room there.
Yes, there is, and what we're seeing is, our customers have told us that they don't necessarily want to refinance and move because of the heavy admin task that's involved in that and the paperwork that's involved with that. So they've said to us, look, Chris, you and your team, can you just write to our lender and see if you can get us a better rate? Because we think there is probably a bit of room to move there on the rate to remain competitive and for that lender, the existing lender, to keep the business.
But isn't it supposed to be easier to change lenders now?
It is, and that's not so much the process. The problem. The problem is that customers just don't want to do the life admin task.
Right.
All the paperwork again. Yeah.
Okay, so when we're talking about this, let's talk let's pick a hypothetical case study, for instance. So somebody that's on the interest rate's gone up to, 4% at the moment, 3.5%? What are we talking about at the moment?
Yeah, probably 4.5%. So if those customers, would come to us and they say, hey, Chris, we don't really want to refinance. We're sort of happy with the lender. All our business is with that lender. We just want a better rate on our existing home loan. What we could then do is write to that lender and say, hey, the client doesn't really want to move, but they want to become more competitive on that rate. So the difference between or what we're seeing there is that customer that's existing with the bank already may drop from say 5% with no action down to 3.9, 4.1, something like that. So there is quite a bit of movement there if they haven't asked for a discount in the past. They haven't rung up and said, look, I want a better deal.
What sort of success rate are borrowers having when they try this process?
Oh, look, probably 80, 90%.
Oh, okay.
Yeah, it's definitely worth asking the question, and there really only should be maybe 0.2, 0.3 between once that rate's been recalibrated, I suppose. There shouldn't be too much of a difference between staying with your bank as an existing customer and moving. There's not really the business case there in we're seeing.
Okay, all right. Well, good advice and a good process to go through. Chris, appreciate your time this morning.
No worries. Thanks very much.
Chris Foster-Ramsey is the principal finance broker at Foster-Ramsey Finance. Have you done that? Have you tried to renegotiate your home loan rate since rates started to go up? Let us know. 6255 1206.